it's Midian Creative Technologies again. I want to thank you for always supporting us. Today we are having a very exciting topic. It's about smart money. We are having a very amazing guest. Our guest today is Lyndra Melanie. She graduated from University of Nairobi with a first class. Zisahau hiyo point ya first class. Yeah, so we are going to learn about smart money, things to do with investing, retirement planning, debts, and all that entails money. So guys, keep tuned, keep subscribing, keep liking, keep sharing, and keep commenting. We love you so much.
Hi, my name is Melanie Lyndra. I am born again and I love the Lord. And above that, I'm also an economist, graduate economist and a statistician from the University of Nairobi. Yeah, I just graduated last year, but we are currently working in the Lord's Vineyard in Focus, Kenya, under the STEM program, that is short-term experience in ministry. And today, welcome to a very nice topic. It's all about money. When we talk about moolah, we also need to talk about smart money. So smart money, in this case, we are going to just give it a small definition, an easy one, nothing economics, nothing book stuff, but we're also going to look at 4 major areas when you talk of earnings, investment, the aspect of debt management, but the aspect of early retirement. So when you talk about smart money, it's not all about how much money you have, let's say in your bank account sitting, or in your M-Pesa, or in your M-Shwari, for those who save in M-Shwari. Leave that aside. It's not all about the money you have as at now, but smart money is how then you can be able to convert, one, your time, your knowledge, but also your skills to be able to find financial independence. So this comes from the point where you properly budget your time. Even when you talk about budgeting money, budgeting your time, developing your knowledge, in that you do not just have knowledge sitting in your head, but also finding ways on how you can monetize whatever you know, but also monetizing the skill set that you have, so that you can be able to generate more money, invest wisely, so that you're able to get financial independence. And when you talk of financial independence, it all narrows down to the aspect where our passive income is greater than our living expenses, in that the money that I get in without even working, without just me sitting chilling at home, the money that streams into my bank account is more or even equal to my living expenses, in that working now becomes voluntarily and not out of obligation that I have to wake up every day from 8 a.m. to 5 p.m. to go to work. So that's my small definition of smart money. You can have yours, but remember, converting time, knowledge and skills into financial freedom. That's our definition of smart money. And starting off with the first key element, when you talk of smart money, the aspect of earning is important, because we now need to start filling our basket first before we start getting to know how then can we generate this money to become more. And the key thing that I want to talk about earning, I know you have heard about earning income and everything, but the one place I want us to point us to is viewing earning as a place where we get to create more value within the 1 hour of work, so that earning moves from how much effort and time you put in work, it moves to how much value do you actually generate within that 1 hour. Because if you look at the economic basis, when you talk about the marginal productivity of labor, this is how much more you can generate from your skill sets, instead of how much more you can earn from, let's say, a given period of time. In that we move from the aspect of looking, I've done a job for 40 hours, meaning I need to get this amount of money, to 1 hour, what's the value that you have produced? A very good example that we use over here is the aspect you take, like a casual laborer who is being paid every day. Mtu ameenda mjengo, amelipa 5 so at the end of the day, if he works for like 30 days, that's like 15,000, so to say, in a month. But then look at a software developer who within the same month can come up with a project, either develop a website, an app for someone, and just one app, Hesh will agree with me, it's around 60k on the higher side, or whichever, let's say 30 to 60k, but I know there are some developers who charge like around 60k for just a website or an app that can be developed within either 2 weeks, now with the use of AI, within few hours you have your app running. So unafaa kuja to coding prompt and you're good to go. So look at these two people. One spends an entire month working every day, and it's hard labor because we must agree mjengo si kazi rahisi, and earns 500 a day. That's 15,000 in a month. But then look at a software developer using the skill sets of technology. He really even doesn't needs an office. Ni kukaa tu in the comfort of their pajamas in the house with a coffee mug, code, and they have a web page, and they get a lot of money from it. So this is what earning really needs to move to, in that you don't look at we're spending a lot of hours, a lot of tedious work working, but then how can we use our skill set with the help of the current technology actually to earn more from whatever knowledge and skills that we have, so that we are moving to generating more money using less time, which will save us when it comes to the earning space. But then the other key thing about the earning space is now generating multiple streams of income. So after you have managed your time well, you have budgeted your time well, in that you are using your skill sets plus technology to be able to generate more within short time, you have a lot of time in your hands to seek out another stream of income. The best thing about multiple streams of income is that you have a lot of channels flowing into your basket, in that you're not only depending on your salary. At the end month ni salon ndo inaingia, and that's what is sustaining you, but you're also looking at, I have a side business over here that it's bringing me money either every day or every month, or you have some investment somewhere that is bringing you money quarterly, semi-quarterly, or semi-annually, So diversifying your streams of income will help you, one, be able to reach the smart money level very easily. So the two key things that you have addressed when it comes to earning: look at the value of your hour, not the hours, the length of the hours you put into work. When you assess your work, do you create more value when it comes to doing a task, or are you just accumulating so many hours with little pay? But then the second thing, look at how can you then diversify your streams of income. And for us as students, it is quite not that simple, but you can start thinking of some business avenues you can venture into. Some job that you can be doing, either online writing or freelancing. For software developers, I know you can freelance even from Kisii, and you're working for someone who is in Canada, or other streams where you can just go find the market gap, start up a business and run with it, so that you can be able to reach the financial independence at a quicker level. Depending on one salary will take us a long time for us to get to that mark where you want financial freedom. But multiple incomes will take us to the finish point of financial freedom very easily. So remember, what value within 1 hour do you generate? And you can use whichever mathematics you want to use to find your value price per hour. But then secondly, how can you diversify your income? Not only depending on salary at the end of the month, but thinking of other streams of income that you can employ to your day-to-day life. But then apart from earnings, when you talk of smart money, there's one thing called investment. Now I know there's a lot of content around investment, and I may not want to talk a lot because there's content, so go search for it. But the one thing that I want us to point us to the aspect of investment is thinking about saving the future money, saving the current money, the money we have at hand, for future more money. Because when you talk about investment, is taking the now money, putting it somewhere where it will grow over a period of time. And it requires a lot of patience. You must agree with me that if you save today an amount, probably in a real estate, for you to be able to earn the actual amount, it won't be tomorrow. It will take like 2 or 3 years, depending on the option that you are going with. So when you talk about investment, you exchange the current value of money that you have for a future benefit, which will be more. And just some quick mathematics that we can do when you talk about savings and investment, because I know majority of us say we save and save, but saving will take a long time before we get to financial freedom. So investing is what will catalyze our movement towards financial freedom. So we have two guys over here. One is a saver, the other one is an investor. So let's say we give them both 10K. So guy A, let's say tuseme ni Aizo akona like 10k, then Mhesh wa investment akona also 10k. So if you look at these two people, they are both doing nicely with their 10k. But let's say after an year, we have, let's say, inflation happening at around 4%. Yeah, so the guy who is saving is not getting any interest from whatever they are saving from. So they will be subjected to the 4% inflation rate. So by the time that the 1 year is coming to an end, their money it depreciate to around 9600. Because if you apply the 96 times the 10k, you will get to around 9600. But then you have on this other side Mhesh, who has 10k and decides to invest. So let's say they invest in an investment that the interest rate is around 10%, but remember they're still being subjected to the 4% inflation rate. So their aftermath percentage will be something like 6%. Yeah, if you take the 10% minus the 4% inflation, you get to like a 6%. So if you calculate your mathematics, after the 1 year, Mhesh will be having 10,600 compared to Aizo on this other side mwenye akona 9,600 because alisave tu. So pesa yake kakula na inflation. But the guy who invested has the interest rates, but now the inflation rates azimuaffect sana. If you calculate, you'll find the one who is saving, their money inaendelea kidepreciate because of inflation, which happens. Yeah, the price yenye tulikuwa tunanunua bread kitambo is not the same price that we are buying bread today. It has increased to some extent. But the guy who is investing, in a way, they are being cushioned, or it's like a safer cushioning, where yes, they are being affected by inflation because we are all living in the same economic setup, but then the interest rate that they are getting from the investment allows them to grow their money instead of their money depreciating. And this is the basic thing that I really want us to look at when you talk of investment. Not just the aspect of just saving and saving and saving without actually looking where our investment is going into. So start today. And when you talk of investment, you don't need to have all the money in the world. Yeah, you just need to start with the little that you have. Start with the little that you have. Look for investment options. I'm going to mention them later. And be consistent in investing and investing. Pole pole. There's the power of compounding interest, where we don't look at it keenly. But today I want you to look at very keenly at the compounding interest when it comes to investment. In that with the 10k, the next time now, if you look at now the scenario Mhesh, with the 10k after a year it will be 10,600. So they will be starting with 10,600. Hiyo yote ita accrue another interest for the next year to come. So it will keep on accruing interest upon interest upon interest, compared to saving, so you just keep money. So start today, start with the little that you have, and look out for best investing options. And now when you talk about the best investing options, I may not have all the solutions to give you, or I may not have the place where I want to tell you can do this and you will get a lot of money. But where we can start off, we said first start off by saving at least. It will give you at least a cap for you to start investing. But then the other area that where you can invest into is the aspect of stocks. I know stocks is not a common language for us in our situation, but it's at least picking up among the few Gen Zs that have been able to interact with. So when you talk of stocks is where you buy a small piece of a company. So let's say there's a Coca-Cola company. When you buy stocks or shares from Coca-Cola company, you buy a tiny bit of the company, and now you become like a shareholder or a stockholder, whatever. So on how you can get money from stocks, there are two major ways. So when prices appreciate, or when prices get to change. So if I buy a stock today, let's say at 4 shillings, then after a year the price is increased. So the selling price equal, the market price equal something like 20 shillings. So if I get to sell the shares or the stocks at that time at 20 shillings, I'll be making a profit of 16 bob. And you see, this is money, and yes, sijeka energy or something. It's just that I bought it at 4 bob, selling it at 20, making a profit of 16. So that's how you get money from stocks. But then the other way you get money from stocks is through dividends. So after the financial year or after the earning period, the companies earn profits, and and some good profit, then they distribute it amongst the shareholders or the stockholders. So you're able to get some dividends from the stocks that you're holding. So the more stocks you hold, the more dividends you get. So it calls for us to just start with the little that you have. You can go to the NSE, the Nairobi Stock Exchange webpage or site, and look at stocks that you can buy with less than 100 shilling. You can get yourself some nice 9 stocks in a specific company. So start today, start with the little that you have. Do your research kwa NSE, you look at the various stocks zenye ziko hapo, then you can go with one. It's all about risk taking, yeah. Si ati ukwe na all assurance that it's going to work. So study the market, take the risk, invest, and then proceed to get something. So that's one investment option when you talk about stocks. But then the other way that we can invest is the aspect of treasury bills and treasury bonds. Yeah, I know when you hear that unaweza kushikwa na mshtuko wa moyo because of how much they cost. I know for the bonds it's like around 50k starting capital or starting amount. Then for the treasury bills it's around 100k. Those figures zinashtua comrade, but don't worry. I think I have a solution or a proposal that you can take so that you hold your treasury bills today and your treasury bonds. So the treasury bonds, just to give a small definition to it, is where you buy some bonds from the government. So it's you dealing with the government. So I have my 50k. I go to the CBK, Central Bank of Kenya, and purchase some bonds from the government. So they will take my 50k and give me some interest rate. So it could be 12, 10, whichever percentage. I don't know the current percentage as of today. So they give you some interest rate. Then after a year or after the period that you have agreed with them, it could be 2 years, it could be 5 years, the interest in accrue. And for you, when you get the treasury bonds, you get to have your profits or the interest being given to you semi-annually, I think majorly, that you decide. So if after 6 months you get some interest, after 6 months you get more interest. So it's like a way of earning money without even lifting your finger to do some efforts. But then on the other side, when you talk of the treasury bills, is now where we have the government giving someone 100k bill. So you give them, let's say 100k, then when the money comes back to you, they give you like 108k. So it will be either the 92, they usually have the timelines attached to it. So the treasury bills and the treasury bonds, it's a nice investment for someone who has that amount, the 50k and the 100k. But for comrades, it's quite difficult. Probably balance ni 0-0 or figures that iteration. But what I could say, the easy proposal for us is to start to small chamas. Yeah, I know sometimes we accredit or we tie chamas to women, old women, but even for us as young people, we can start our small chamas. You can meet up with your group of friends. We say each and every month you're going to be giving 400 or 500 shillings, yeah, to our chama. Then we accrue your pesa after, let's say, depending on the months that your plan is. Let's say after 5 months, then you calculate each month kila mtu atakuwa anatoa ngapi. Then you get your money together, and that will create the starting capital for you to be able to buy a bond with 50k, that is. So from the chama contribution, instead of kuchanga your pesa kupatia mtu mmoja ende nayo home, you just bring the money together, store it for a while or save it for a while, then now invest in the treasury bills or bond, whichever. Penye pesa yenyu utafika, that's where you get to invest. So that's the only proposal that I can have for us. If you don't have the 50k yenye inakustua, find a group of friends. Bora ni people who are credible, wenye hata kuosha, yeah. It's Nairobi or it's Kenya. People can easily clean you up with everything or your savings. So find people who are credible, people who you share the same money values, yeah, people who are honest and are committed to the aspect of contributing to the chama. Then you're able to bring the money together, take it to CBK, get yourself a bond, yeah. Then after that, now the profits could be plowed back into more investment options. Now you can plow it back and upgrade from 50k to 100k. With short time, you'll find yourself owning a bond of 1 million, 2 million, thereabout. So it's a nice deal, but if you put it to actual working, it will work for you. Yes. So that's with treasury bills and bonds. So the other investment options is real estate, where you get to buy a house somewhere, then it gives you the rental income, or you buy a plot of land somewhere and you jenga some rentals. But for the too small mwananchi, it requires a lot of capital. So I'll say, ukiishaomoka, you can consider to do real estate. But for now, just have the plan, be doing research on rates, on how you can invest in real estate businesses and stuff, so that at least when the money comes or when you are financially stable, you can be able to invest. Yeah, after you've already known the knowledge, or you've already researched about the knowledge for all this period. So real estate is there for us to invest and to get to enter into that space, so that we can be able to reach our financial freedom easily. So the other investment option, I know majority of the people say it's like a saving option, which I tend to agree, is when you talk about money market funds. So money market funds, it's more of a saving option and not necessarily like an investment option, but it's a nice place for a small comrade to start. So when you talk of the money market funds, this is where you set aside your money for a period of years, then accrue some interest rates. Like for example, there is Etika, that is, you start, or Zidi, even Zidi money market fund, ya Safaricom, you start with as low as 100 bob. Yeah, that's the starting capital. Then for them, each and every day, you get some small percentage of interest. Yes, kuna some tax zenye unalipa, it's called withholding tax. Like I think 2%, majority they charge 2% of withholding tax, but then leave that aside. So with the money market fund, you start up with some capital, save, you put your pesa over there, then kuna some interest yenye una accrue. So for some ni daily, for some ni monthly. So things like Etika and Zidi, they do it daily. Like you accrue the interest percent daily. So unaweza pata, if you start with 100, by the end of the day you can get like 2 cents or some 7 cents, then they continue increasing. So the more you save, the more you get more interest. So person mwenye ako na 100 na mwenye ako na 1,000, they will get different interest. So in the power of compounding interest that we look at when it comes to easy money market fund. But then we have other options like I know CIC money market fund, Sanlam, Britam, and other money market funds zenye ziko huko. You start with 5,000 first. So if you have your clean 5,000, you can decide to start with it. Then each and every month una jaza na 1,000 bob each and every month. Then now kuna some percentages zenye ziko. For CIC, I think for now it's 8% thereabout of interest. Britam is higher. I think the last time I checked if it's not 11, around 12% of interest rate. So you see, this is a nice way, a nice smarter way of saving, yeah, and a low-key way of investing also, that you get to put your money, and over the period of time it generates interest for you. So for one to do, or homework that you can take away from today, is start a money market fund. Don't look at how much you're starting with. Develop the discipline of every time saving and saving and saving. Then the money will be able to, the compounding interest will be able to grow and grow your money. So by the end of a year, you at least have something. If you started with like 5k saving, by the end of the year, you'll have accrued something like 12k if you do the mathematics and everything. So those are the major investment options that you can do. I know that there's also another list of other investment options, but those are those that are coming to mind. So start somewhere, start small. Do not despise the small beginnings. Start small, grow your money, and be disciplined when it comes to saving. But then the other caution when it comes to investing, do not look for easy rich schemes. Yeah, there's a lot of pyramid schemes huku nje. Unaambiwa bring your money, by tomorrow it will be 100k. Who told you? Yeah, unless ni God doing a miracle in your life. So do not be quick to go for easy money, in that they're telling you, give us your 10k, tomorrow we'll give you 100k. It does not add up. So be wise when it comes to looking for the investment option. Usijipate umeingia pyramid scheme, no motion proper, then you start coming crying over here. So take care of yourself, take care of your money when it comes to investing. So that's investment. Your current money, allowing it to grow when it comes into the future money. Look at the various investment options. Start small. Singoje 100k so that you start investing. With your 100 bob, you can buy a stock, you can start a money market fund, or you can start that chama today and grow your money with friends. Yeah, so start today and get to invest. But then apart from earning investment, the other thing when you talk about smart money is the aspect of debt. Yeah, madeni. I know in Kenya we are used to the Mshwari Fuliza, not Mshwari Fuliza, the two small talas, loan and everything. But we forget to see the big picture of debt. So the one thing that debt does to our money is that it kama inasongesha nyuma instead of progressing us forward. Yeah, so if you imagine if I have a debt of, let's say, 10k today and I start earning let's say 20k, so from my 20k in my budget there will always be debt payment. So in a way the money that enye nitatumia kuinvest or save, it's not there because probably it's going to debt payment or debt management. So when you talk about debt, the key thing that I want to discuss is that debt in itself is not bad. When you go and Copa today, or when you go to that Fuliza or that debt, whatever, the bank, and take some debt, it's not bad. It's okay. Yeah. But then where the bad thing comes is how we manage the debt. Because we have seen economies grow, we have seen people venture into businesses and thrive because of debt. So debt ni kama like a pushing force that accelerates you to the plans that you have. So if I want to start a business today and it requires 100k capital and I don't have 100k, I won't sit and wait until nipate 100k. I can easily go to my bank, I take a loan of 100k, start up the business. By after a month or after 3 months, the profits could be even more than 100k. So you see, I'll be able to progress. But then there is a person mwenye atachukua 100k to start up a business, and probably they don't start up the business, they eat the entire money, or they venture into a business that is not viable or that is not profitable. Then after the 3 months, they're actually making more losses than profit. So they are finding themselves in more messes, in that they can't repay the debt, they can't contain the business, or they can't sustain the business. So taking out debts, si mbaya, yeah? But when it comes now to the management, how you manage is where we get to draw the line. And for us as students or as young people, I really want us to point to one area of debt that majority of us do not see it, because haitumangi sana. When you talk about help, yeah, I don't know how many of you have applied for help, or how many of you are receiving help, or how many of you bado mjamaliza kulipa help after 13 years of completing campus. So when you talk about help, it's a nice debt because it's investment. In economics, we call it the human capital investment option, where you get to invest in your education with the hope that it will generate income in the near future for you. How we look at it as a layman is that when I take a help to pay my university school fee, the end goal is that after the 4 years, I'll get a job. After getting a job, I'll be able to earn more money. My skill sets zita increase. Yeah, you remember the definition of smart money, converting your skills into financial freedom. So my skill set will increase. I'll use less time with a lot of skill set to generate more money. So it's an investment for a good cause. But then the downside is when we invest in education, but then we all know Kenya, you fail to get a job because there's the time of there are no jobs in Kenya. There are jobs. Yeah, and after you attend. So we don't get to find the job so that we can be able to repay our debts. That's the only gap that I say enye kwa help. But the one mistake that I'll say for us as students we get to do kwa maneno ya help, we treat it as free money. Yeah? So when we get help, we don't look at it kama ni debt. We don't look at it that we'll pay it later in the future. We look at it ni free money. Mtu apate help leo, a student in Kisii, utampata diblos, anadimbua everything, yeah? Ni kuchafua meza from evening to evening. And we forget that this money is actually a debt that you are supposed to repay after campus, because immediately after campus they will look for you and they will tell you they will only spare you, I think, for 1 year. Then after the 1 year, now in the second year after completion of campus, you have to start repaying e-pesa. Yeah, so the one mistake, do not look at help money as free money. It is not free. It is debt that you are accruing over time. Sometimes we have it as easy money, so that we feel like, since it's easy money, I can also easily spend it and just squander it within a day. You find students, help bilingia leo, by jioni they just walked through town, they came back with a lot of stuff and money is over and they don't know how to survive for the rest of the semester. Don't be like that student or that person. So we look at help money in the lenses that it is a debt that needs repayment. And how then do we get to repay this debt? Yeah, for the finalists, probably, sorry, it's too late because majority of you are completing campus or mmeshamaliza. But for the ones who are still in school, when you look at help as debt, then you'll look at how then you can generate income while in school. Our patron here at Kisii University Christian Union usually tells us, look for something that you can do with your hands to generate money. So for the 4 years you're in campus, look at a skill that you have that you can monetize to bring you money. So as you receive help money, if it's plaiting hair, yeah, go and plait the hair. If it is making the soaps, doing crochet work and selling, if it's graphic design, do the skill, get money, save, yeah, and invest your pesa, so that when it comes to repayment, it's easy to be able to repay the money that you took from help. But then the other key thing, after completion of school, diversify your income sources, so that you do not only rely on your pay slip to pay your help money. So debt management is very important to all of us, even for those who are working, who take out student loans or health loans or any other loan for your business. The time you take out that debt, do your cost benefit analysis. Is what you're trying to invest in profitable? If it's a business, are the benefits more than the costs, so that you make the profit? Or are your costs even more than benefits, ending up with a loss? There are some things you take debt for, and like health. If I get sick today and I don't have the money for payment, it's a must I take that debt. So sitakuwa na a means of repaying it, because this is like not an emergency but a critical area that I really need to pay upfront. Yeah, but then the key thing, how do you manage your debt? Clear them quickly. You're able to free yourself from things that eat up your income. Clear them faster. You're able to have freedom with your money, not being tied down to debt. So debt will slow your journey to economic freedom, or poor debt management, so to say, will slow your journey to economic freedom. But debt and proper debt management will accelerate and will quicken your journey to economic freedom. So look at your life, look at the debts that you have, and change from there. Yeah, for people who their personality, they just enjoy debt or they enjoy being in debt, it could start by changing your money personality and stuff, so that you don't accrue a lot of debt, which will be heavy on your income streams. Yeah, so put aside debt for now. The other key thing that we want to talk about when we talk about smart money is the aspect of early retirement. So don't let the aspect of age ring in your bell when you hear the word retirement. It's not all about retiring at 50, 60, or even 25 for the lucky few. When you talk about early retirement in smart money, it narrows down to getting to the point of financial freedom. Remember the definition that I gave at first about financial independence is what I want to bring in when you talk about financial freedom. That in financial freedom, we get to a point where our passive income is more than the cost of living, or the living expenses, the daily expenses that we get to accrue each and every day. So for you to have an early retirement, look at how far are you from getting financial freedom or financial independence. So that's what early retirement, or the definition I want us to use when you talk of early retirement. So early retirement now goes back to the three key things that we talked at first. The first thing was earning. So when you look at earning, have you diversified your income stream? Yeah, have you also been able to convert your time, knowledge and skills so that it generates more for you in that 1 hour that you are working? But then look at investment. Have you diversified your portfolio investment? In that, you're not only investing in one area. Kikiumana leo with treasury bills, your money sinks and goes away with it. But do you have investment here, a kashamba over here, just in case today the Kenyan economy collapses? You have your shamba to probably generate for you, unless pia ita collapse na the economy. Yeah, but then the passive income also comes from our investment. So when we stop working, whatever money that you have saved up in investment is what will be working for us. But then the other key thing, debt management. So have you been able to clear out your debt, or are you still being dragged down by debt that is in your life? So these are the key 3 pillars now when it comes to the conclusion of early retirement. So look at how far from the 3 things, how far are you from your financial freedom? Early retirement allows us to view work as optional and not something that you must do each and every time, 5 a.m. to 5 p.m. or 8 to 4 p.m. you're in the office working to get that pay slip at the end of the month. Early retirement means that you can choose to go to work today because you have some passive income somewhere giving you money. You have some passive income somewhere generating for you some money. So that's early retirement for us. So start today by calculating how far are you from the early retirement, and stop now working from the point that we need to work and work, because I know probably in our mindset it's the work and work and work and the tedious work that we see that will generate us. Start looking at allowing money to work for you instead of you constantly chasing money. Yeah, 6 a.m. in the bus, it's raining, you're being rained on, and you're just going to the office. The boss is not even a good person. Yeah, we bless the Lord for some of us who have very nice bosses or team leaders. So allow your money to work for you when you talk of early retirement. So depending on the age that you want to retire, calculate and do your mathematics well and plan as early as now on the age you want to retire and what measures you can put in place so that you're able to retire. It starts by calculating how much do you spend in a day or in your monthly expenses. Yeah, this calls for you to budget. I know budgeting, we talk about it a lot, but go back to your budgeting notes. We won't tackle it easy. Yeah, so look at your budget, monthly budget and expenses. How much do you spend in a month? How much do you spend in a year? Yeah, then look at your income. The income streams in a year, are they able to sustain you with your expense list in that year? If they're not at par, or if the income is not more than the expense, then safari bado ipo. But if at least your income is more than the expenses, you're at least getting to financial freedom and independence. So start by doing that calculation. Start by knowing how long will it take you to be able to retire as early as possible. At the age of 25, it's not a big deal to retire at that age, so that work becomes voluntary and not optional. Yeah, I know it sounds weird for some of us when you're tunakaribia miaka, but it's still possible. So it calls for us to start today, start early, and plan for your retirement as early as now. The one key thing that I'll say that I really enjoy and I also am pursuing early retirement is a bit of family, because I really value family and just taking care of my future family that is yet to come. So I feel like early retirement will give me a lot of time to just be there for family, be there for God's work, because I'm also passionate about serving the Lord in His vineyard. Yeah, so to bring everything to a conclusion when you talk about smart money, is that wealth is not you earn, or is not the money that you have in your bank account. Wealth is what works for you when you have stopped working. So look at your life keenly and where you want to be when you talk about smart money. Check your earnings, investment, your debt management, but also your early retirement plan, and get to generate wealth for you today. Remember, financial freedom is where your passive income caters fully for your living expenses. So start today, start small, and I pray that your money will grow and you'll have a smart money journey. So this has been me, Lyndra, just talking about smart money. Yeah, and I pray that it has blessed us and it has pushed us to check in our pockets and start the journey. Bye.